Okay, let's see what's going on today on the markets.
Okay, in terms of data today in Europe, quite a lot of, well, in fact, loads of inflation data. I've just picked out a few data points to look at. So first of all, in the UK, I've gone here just for the headline CPI, Consumer Price Index. This was for May, and we look at the year-on-year figure first of all, up 0.1% versus the forecast of 0.1%, so dead in line. And as far as the month-on-month forecast or figure was concerned, up 0.2% against the forecast of 0.2%, so dead in line, but miles from the Bank of England's 2% inflation target. And then in Germany, the HICP measure, this is the measure that the ECB prefers of inflation, and so again it's the May data. First of all, the year-on-year figure up 0.7% was the result. The forecast was indeed up plus 0.7%. Month on month, we got a figure of plus 0.1% against a forecast of plus 0.1%. So again in line. I guess the encouraging thing is that the year-on-year figure is a positive number, and it's perhaps a bit closer to 1% than it is to 0. But nonetheless, it's hardly enthralling, and it also again is well below the ECB's own target of a 2% inflation rate. Then we had another figure that would have bit of interest to the ECB and to a lot of people around Europe, and that was the change in employment, and this is for Q1. Again, hardly great reading. Came in at plus 0.1%, in line with the forecast of plus 0.1%, but it's pretty cold comfort for the 11.5% or so of European.
Yeah, so the QE might have stabilised GDP, but it's not doing anything for unemployment.
No, and I think the truth is that the employment situation in Europe is a lot more about structure than the actual health of the underlying economy. Yeah. And then the final piece of Eurozone data, which won't have gone down very well, I doubt, in Frankfurt, the ZEW Economic Sentiment Survey for June for the whole Eurozone, a reading of 53.7 against the forecast of 60.3.
A disaster, basically.
Yeah, and the prior read of 61.2, so nobody saw that coming.
So that could have knocked the market on its own, even without the Greece situation?
Yes, potentially it could. I think the Greek situation is probably why the economic sentiment's turned around. Yeah. But yeah, it's a bit self-feeling, but nonetheless it just shows you what investors are feeling.
I don't think I've seen such a big miss in any metric.
I had to check it in 3 places just to make sure it wasn't wrong, but no, it's the correct figure.
Yeah.
Okay.